Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And I want to remind everyone that we have President's Day here in the U.S., so there will be no stream this coming Monday. It might be a good weekend for those of you in the U.S., and especially with Monday not being a full trading day, that you take that time to work on your craft, to work on your trade plan, to review the streams, and to maybe access the Trader Lab library and do some review. Use your time productively and always move towards your goals. And if your goal is to create a business, work on your plan, evaluate your progress, set goals, measure yourself, because all we have is time and hopefully assets. We want to preserve the assets so we can deploy them productively, and we don't want to squander our time because nobody has unlimited assets or unlimited time. So just a suggestion to use the weekend always productively, review your work, record yourself with like OBS software as an example. You can record your screen and you can speak or narrate the market and see and measure yourself. Continually think about your goals, continually move the ball forward, continually hold yourself accountable, and be realistic. If you're building a business, you got to build it one piece at a time. So what this stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. We take a higher time frame approach and break it down into shorter time frames and eventually into something called fractals or microstructure. So it's a top-down, bottom-up approach. And it's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There's no cost to become part of this community. It's a serious trading community. It's about the business of trading. It's not romper room. It is really about those who really want to lay the foundation for potential sustainability in this business. And as we know, most retail traders do not succeed. So what is the difference? And now, while everybody, individually is different and past performance is never indicative of future results, I believe almost anyone can learn how to trade if they come to Trader Lab. But they have to be willing to do the work, and they also have to align psychologically what the challenges of this business really are. And we go into this all the time, not only in the Trader Lab, but here in the stream, but it's really important you understand what is the business that you are in. And in my opinion, it's the gaming business. We operate just like casinos do. And nobody wants to be a gambler, but the reality is there's the house and there's the gamblers. And gamblers are traders who have no plan, no statistics, and are just playing a slot machine. And that's wonderful. I always say go to the casino, get the cocktails and the ticket to the buffet. If you want to be in this business, though, then you might want to try something different. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. Now I'm going to start today going over the higher time frame, and then I'm going to take us into something a little different initially, and that is structure. This is the higher time frame. This is called a composite profile. And basically what I'm doing with this, and it's going to look rather confusing, and I post this often in the Trader Lab, and it's a way that I slice up the market. Now, I always get asked, what's the right way to do anything? And I'm going to suggest the right way to do it is, how do you extract information that's relevant to you in the time frame or fractals you operate in? What I tend to do is I isolate the pieces that are relevant to where I am trading right now. Now, I understand this, in other words, what am I trading right now? I'm trading this high to here. However, I tested here this high. This high is what's called naked volume point of control. It's a retail price. And on this day, we came up and checked it and we rejected it. So it's too high. So I left this profile, and all this is doing, oh, I can't open this up. This is Investor RT, is it's measuring the volume in these three bars because they're overlapping. So it's a consolidation. I found up here from this consolidation too high, and I rejected it. That's the high. And now I consolidated over here, hit the high, and then left it. So this is important. This day I came up and checked this high and rejected it, and it set this whole thing up. So what I do is, now I am aware of this. Why? Because this is still open above in its resistance. So it's that I'm leaving there. This I'm leaving here. I don't need this now. I did previously, but what do I know? Why is this important? Because I checked this price and I got my sellers. So what do I know? Too high from there. Too high. Retail price here. Too high. And then swing low. And what was too low? Too low. Now, I can't get into a lot of detail, but I'm just giving you an idea of how I slice and dice. So I look at this right here as a swing high, and this is a swing low. My sellers are here, my buyers are here. Why would I ignore that? So this range, swing high, swing low. And the highest volume for this whole thing, including this, is right there. That's important because what that suggests is the market, this is too low, this is too high, and this is the retail price. In other words, the highest volume. The market tends to have certain behaviors. If this is the fair price, then where's too high and where's too low? If I find right here that this is too low, and what do I test? This price here, and I know this is confusing because it's fractals. Yesterday's low was right here, day before yesterday. Well, if that's too low and I come back across the range and I close basically at a retail price, the job of the market is to try to find out what's too high. And that sets up coming out here and potentially taking this out or not. Remember, trading, who knows? So what else do I do? Well, I now draw a profile around this high and this low because this is becoming a swing inside of this swing. So this is the profile. So what I'm looking for is to continue, take the stops out up here. This is today's targeting, and check this. And then maybe get here or wherever it goes, it goes. This is, unknown. Now, is everybody tracking so far? By the way, how are we doing in YouTube? By the way, if you're in YouTube, if you have questions, please throw them in the chat. I can't see the chat all the time, but I'll do my best. And please give a like and subscribe to the channel. Also, there's a link in the bottom of YouTube if you're interested in the Bookmap Discord Trader Lab community. Now, I'm going to show you something else. Something I don't normally get to, but I like to keep you from falling asleep. This is yesterday's RTH profile. This is market profile, volume profile. So let's not get too carried away with it. But this is part of the auction process. This is called a single or a low volume node. And the way the market tends to work, and I always have to think about maybe, is what's too low and what's retail. The high volume, and think of this like shopping, high volume is your retail price. So I know and this is the ETH over here, by the way. So I was looking at this, And I'm going, well, and I marked these on my book map, which I'll show you. By the way, this is Investor RT charts that I'm showing you right now. And what's really cool is it's really designed for profile traders, and it has all the, everything you ever wanted but the kitchen sink, and it does it at a very high level. So it's an excellent piece of software. But one of the things that's really good for Bookmap traders is that it exports levels into Bookmap automatically. And that's really nice. It saves down on the labor, plus they update in real time. So here's what's important. ETH, I have a level from yesterday's RTH. I have it there, which is around 22-ish, and I have one around 14. Let's remember that, okay? Now, moving along. What is this? It is now about 5 a.m. Yes, I'm up. Believe me. And this is that level. Previous low volume node, remember around 22-ish, 23, right there. It's on my chart. And the next one's down here. Okay? So I had those two levels around 14 and 22. And I'm sitting here and I'm going, and I sit here and I'm going, I don't know, my overnight volume point of control is here. This is the retail price. What the market tends to do, it tends to rotate and come back. It's called mean reversion. It is a specific trade plan, or shall we say a context, and then in this condition, you would have a potential plan to operate in it. And you're going to find this interesting, potentially. Watch. And this is structured trading. This is Trader Lab trading. And of course, you have to vet this for yourself. That's what the Trader Lab's all about. This is my location. Now, when it's coming down here, I am clueless, not ignorant, clueless. But what do I know? I know the auction. I know how markets work, but I can't predict anything. But I know something. And what I know is we're in a bullish move at the moment. We are moving higher, and I have targets above. And I also know, based on what I just showed you at the top of the stream, that this is an outside edge from yesterday's RTH, and that we reverted back to the mean. Now, the mean is this. So yesterday in the RTH, we came out here and then came back here, which is the retail price from the RTH. It's a target. Now, the other piece of this is, in the current auction, the ETH, this is the retail price. So I've got high volume sitting over here. What that tells me is if I come to an outside edge, and this is a trade plan, and it's almost like bread and butter. And yes, it's almost like walking on butter, and you can slip and fall on your, but this is the outside edge. So that's the point. So I'm coming out here and I'm watching it. Yes, 5 in the morning. This liquidity is in the book. I think somebody turned their algo on, or either that or, And I'm looking. So I come through my level. Now, the thing about low volume areas, they're outside edges in the market. And I always say to traders in Trader Lab that are developing traders, and we're all developing traders, is that you don't want to step in front of one of these. You want to have it go through and then look if we come back. If we come back, it sets up that mean reversion, because that's the mean. Watch. So what happens here? Let's look. Liquidity flips over here. See the liquidity. So door number 1. What else do I see? Sell stops coming out. Well, that's lovely. Hold on. There's more. I got to scrunch this up for you. And again, it's 5:30 in the morning. If you're interested in trading the ETH, it trades. So here I see absorption. No clue. Location, location, location. Look at the trigger. Now we're going to talk trigger. This is microstructure. And these are triggering structures. And what I try to do for traders in Trader Lab is help them learn the language of the market. I don't use indicators, and I have to say that. And it's not that I'm not using indication. I am using an indication of behavior, but not an indicator. So my high volume in this microstructure, you can see that node sticking out. So what happens here is we're going to zero, right? Well, why did we not go down here? Because there's a passive buyer here. And I see an iceberg, and I see my liquidity. Let's look at all the pieces. Now, this is order flow. And the profile, the auction, this is an outside edge. I have a confluence. And believe me, nothing more than that. Except, what's the context of the market? Bullish. So far, right? So as far as I know, north. So my orientation is longs only. So far. So this is the trigger. Now the entry is here. Stop under here by 3 ticks. Or here. Stop under here by 3 ticks. Let's see what it does. Watch. Stop under here by 3 ticks. Not taken out. You bought it here. 1 tick above. Never mind buying it here. Would it be nice? I'm giving you the worst case scenario. 3 ticks below. You have a 3-point stop and you're not stopped out. Watch. Just keep watching. This is a sweep. Now, when I took this morning, the sweep would have been nice if it was over there, because that would have given me more confidence. When I got this, my coffee almost got spit on the monitor, and I figured, oh, I'm going to get stopped out. Now, the voice in my head, that's Hyde. Who's Hyde? Jekyll and Hyde. Hyde's the lunatic. If you don't know about Jekyll and Hyde, the story, Google it. You need to understand Jekyll and Hyde. Hyde's a lunatic. It's emotional triggering. It is fear. And that's what gets us to do things that are not in alignment with the business we're actually in. This is like an anvil going to be dropped on you and you're going to run out of the way. Why? Survival instinct. That instinct is triggered when you hear in your head, oh, I'm going to be stopped out. Let me bail out of it here and save a few ticks. I have done that. So have you. And now I understand that doing that costs me over time. It doesn't mean it won't stop me out. It means I'm breaking my rules and my plan. That's what it means. So I'm not stopped out. I get my sweep. This sweetens the pot, as it were. And if I don't get below here and I get my buyers again, where am I? I still have a long. And I'm now doing something called mean reversion. I posted this in Trader Lab this morning. Now, where's the mean? You're going to ask. It's only 8 a.m. now. Where am I trying to go? Here. So that's the primary objective of this trade, okay? Mean reversion. That was the first trade, and the RTH hasn't opened yet. Anyway, I wanted to show you that. Hope that's useful to you. And so, and you can take this as far as you want. We have yesterday's high, but we also have the RTH open. This trade is called mean reversion, and you could just take it there if you choose to the overnight VPOC, which is the target, and you'd be done with the trade. Over, finito. Thanks for playing. Nothing wrong with the 22 to 30, whatever it was here, 35. What do you guys think? How we doing in YouTube? How about a like? Give a thumb up. This is Trader Lab, and you're all welcome to the Trader Lab community. You can learn this if you're interested in it. This is about the business of trading. We're not playing a video game. It's about career building. So let's look now at the RTH open. So RTH open, and I am leaning long. At the moment, I have no reason not to think. Now, there's more. I got to find it. Where am I here? Okay. So that was a long, and that would be fine. In other words, you take it to, or you hold a runner because we have other targets up here. Yesterday's high is a high probability target. Subject to your plan, you could just take it mean reversion. This is the mean, and you're out at the overnight volume point of control, or you go through the RTH open because we have this yesterday's high and a high probability of taking it out. It's about 80%-ish probability. Past performance, not indicative of future results. You got to vet everything. And then this has a high probability, ETH high. Okay? In fact, either ETH high or low has a high probability. So we already checked the ETH low. So for me, at this point, longs only. So let's watch. Follow the yellow brick road. This is yesterday's naked volume point of control. Remember the top of the stream. This is the retail price. Well, if I open, I have possibilities. I can come here or, wherever. The wherever is part of the joy. Who knows? So for me, this is an area for me to get long. However, you'll see the however. So when we open in balance, which means in a high volume area, overnight VPOC, retail price, in other words, fair. So the market can slosh to both sides. And that's called an open auction. And the reason it is going to potentially, I always got to say potentially because we don't know, is if this is where the high volume is in the ETH, that's the most recent auction. Now, when we use the term auction, what is this about? It's about the purpose of the market. The market's purpose is to try to figure out what's a fair price because most of the volume gets done at a fair price. Like when you go to the store, there's a retail price. That's the fair price. Seller's going to sell it to you for that. You're going to pay it. Everybody's happy. High volume goes off because it's a fair price. If the price goes too high, the volume will dry up and then we'll run out of buyers. And then if the sellers want to create volume to move the product, whether it's an S&P or a can of tuna, they're going to have to lower the price. On the other side of that, if the price gets too low and the buyers get enticed and then they start consuming the inventory, then the sellers are going to be raising their price, you see, until they find equilibrium. That's what creates rotations in the market. This process goes on in all time frames or fractals. So what do we know? What we know is this is too low. Maybe. And we know what's below us is too low. So that means, for me, longs only, unless I'm a counter trend trader. And for the purpose of this stream, we're kind of try to lean on one side. So let's look at the first opportunity in the RTH. We come down. So what happens here, now this is the RTH open. Let's start doing some labeling. The way I kind of try to do this is I want to note the shopping. What is shopping? How do we define some of this stuff? Shopping is volume. So what does it say? Let's talk about what we're looking at here. This is a language of the market. Now, retail traders, all of us, we use indicators to define the market. So whatever's going on in price and whatever we use, whether it's moving averages or oscillators, which are moving averages, derivatives, whatever it is, we're measuring something. Well, I have found that I'm measuring something also. The difference is I'm doing it here. I'm not trying to do it anywhere else. I'm reading the microstructure here. And I can tell, not ahead of time, like we all wish we had, clairvoyance. No. But I know when this behavior happens, in the shopping experience, I ran out of buyers here and I got sellers here. Why did the market go down? Because there's a passive seller and there's the liquidity in the order book. Now, order flow is coming into this, but the yellow line is the high volume. Well, if the price in the store at that retail price, you go down the street to your little neighborhood down the street supermarket for the can of tuna at just before dinner because you thought you bought it and you didn't have it, and it's $3 a can. Because you're committed to the tuna casserole, you pay it. But you'll notice the volume dries up and the buyers get in the car and they leave the store. This volume that's up here now is too high. I label it, I call it a variable high volume node. I'm not paying that. Get out of here. And we leave. Oh. Well, what does that suggest? Underline. Suggest. Maybe this price is too high. What do you think? If you were shopping with me and we went to the store and we found a price that is too high, what would it look like? This is what it would look like. And we don't know until hindsight. So we have to get over this idea that we can predict anything, because we cannot. We can anticipate, but we cannot predict. I can assure you, if the casinos could predict which hands are going to win and which are going to lose for them, they would skip the ones where they pay the gamblers. So if we're in a gaming business, all we know is what might happen. Here's what I know when I see this. I found too high. These guys were absorbed here. My sellers are below my buyers, and you see the rotation. Where's the last time I had any rotation like that since the RTH opened? It's the first time. Change in behavior. Where's my resistance? It's there. Where's a potential language that I can interpret? It's either a short here down to there, or if you're long biased like I am, it's an exit or nothing. Because in the Trader Lab, if you open in balance, you anticipate two-sided trade. That is fair price. What's too high? What's too low? Oh my. That's Trader Lab. Now, where's the stops, you're going to ask me? Under the opening swing low. That's where the stops are. I'm going to label it. And this is a specialty trade. Now you're saying, what's a specialty trade? In the Trader Lab, we have trade plans. It's not a novel idea. It's just most traders are playing a video game. They don't understand they're actually trying to be in a business. And if they don't treat it like a business and understand market mechanics, there's a low probability they're going to have any sustainability. What do we know about the buyers in this leg? Sell stops. Where are they? Opening swing low. What do we know about the sellers in this leg? Buy stops. Opening swing high. Watch. Does this make sense so far? Is this too slow for you? If you want to learn trading, this is the way you got to think, in my opinion. So what do I know? Sell stops here, buy stops here, no clue, break low, sellers take control. Uh-oh, where's resistance? Back here. Where's my variable high volume node? There, resistance, resistance, stops here. Now what? Going for the stops. Watch. What do? I get under one tick, I think it was, or 2 ticks or so, my opening swing low. This is my target. Now, the problem with this is I need a trigger here to go long to come across this range and take these guys out. So these guys are under the bus, the opening swing low. Thanks for playing. And I got these guys over here. I'm going for them. Right here, we ticked this. Now, I looked at this. This is a trade location for me. And I did not take it. And you're going to say, well, why didn't you take it? It's part of your plan. Because I needed it to do something else. I have this little double bottom thing going on here, and I have a buy sweep. The buy sweep suggests the possibility of continuing lower. It breaks high, and I get my test. Here, I'm anticipating going lower. And this level, remember, held up. So I'm looking at it coming down. Doesn't do it. I don't get long. Not thrilled. Watch. The location was fine. I did not have a trigger for me. Now, by the time, and I have this as an obstacle, this did not qualify for me. I have pieces, but I don't have a trade that is suitable based on my plan. But there's more. Watch. Where's our stops on the other side? It's over here. Watch the behavior. This is called VPOC migration. I'm following a process. Let's just follow the yellow brick road. I'm going to label it variable high volume node. Watch what I do. I'm not saying it's good. I'm just saying it's just a process. That's all this is. I'm following a consistent process every day in the stream because the market is random. This would have been a great place to get long. It was where I would want to get long. I would like it to check it and then give me a viable trigger. So for me, this wasn't a viable trigger. Me. Doesn't mean for you, just talking about me. I'm rather relaxed about this most of the time. I've been trading 45 years. I get kind of detached in the sense of feeling compulsion. Most developing traders are dealing with FOMO. And yeah, we all feel FOMO, but after a certain amount of trades, and in a career, if you have one, you'll be taking thousands of trades. Kind of hard to imagine. But psychologically, we live and die on each individual trade. Well, at some point, you might get over that and just look for trades that give you an edge and not worry about it. By the way, this over here, this structure, which happened below, before I should say, the RTH open is also support. So I did not recognize this and I did not see it at the time. So you could have leaned on this. I wasn't aware of it. So I didn't get the trade. Now, VPOC migration. Let's watch the behavior. Now, what I'm trying to do is I have targets above, ETH high, and targets above, which are still on the hit parade for me. Now, let's watch. Now, I have an opportunity. What is this? Let's go back to the shopping experience. Too low, too high, too low. So what is this? Let's watch. Now, there's a couple possibilities here. When I break here, this sets up a potential long, just so you know, and you are trying to get to the ETH high, okay? This is a potential trader lab long. It is advanced, might not be appropriate. I'm just pointing them out. The next location is here. If you took this long, depending where you entered, you might get risk neutral or you might take a stop. It's all a function of your trade plan. If this we come under here, which was support, saying a higher, we're going higher, and I break below, where was the last place it was too low? It's right there. Let me put a little line across here. This is my next location for a long. It's right here. I need to scale there, and then I'm back on going for this. Is everybody with me? This is structured trading. Now, here you'd be risk neutral, and then it's trade management and statistically over 90% probability to take out either the ETH high or low, and you have to vet that. Past performance, not indicative of future results. So we're going for the ETH high. So this is a nice long. And what happens up here? Joy, oh joy, oh joy. So I don't discuss trade management here in the stream much because it's a little more complex. And it's also something that needs to be individually determined based on vetting. But let me show you the reversal. Now, reversal structures are trade management opportunities. If you got long here, your scale is here, and then let's look at the structure. This is a micro auction right here. The buyers are here, the buyers are here, the buyers are there, the sellers are there. That's why it's doing this. Seller is there. You see him? Buyer is there. Seller is here. What happens? They're absorbed by the volume here, and we break high. I now have support here. There's the test right there. Higher. Chop, chop, chop. Sellers are here. Buyers are here. And buyers are there. The seller was absorbed. Thanks for playing. Broker sends you a gift basket. By the way, I hope you all get boxes of chocolate from your broker for Valentine's Day, because I know your brokers love you. And now, buyers are above. Sellers under the bus. Buyers are here. Going to the moon, Alice. Overnight high. Let's go. Get the champagne on ice. Seller was run over here. Buyers are above the seller. Going up. Watch. Now, liquidity. You got to pay attention. What happens with liquidity? What happens? So what is happening here? I got my buyers here, and right here I'm going up. Because with liquidity, what's going to happen? How about this? No clue. Why? They can pull or they can interact. You don't know. They can fill some, they can fill none, they can add more. It's always part of the joy of randomness. So let's watch. Buyers going, everything's cool. Right here, my buyers are here. This seller was absorbed. My buyers are above the seller. Everything is working. Buyers are here. Buyers are here. Buyers are here. Buyers are there. Seller gets below the buyer. Everything's wonderful. Support is over here. Going to the moon. Right here is micro high volume structure. I watch the volumes. Let me just show you what I'm talking about. Where's the volume here? It's right here. So it's too low. Right here is the volume in this structure. I'm showing you how I use the chart volume profile. And my buyers are here. When I break above it, it is an auction. And it's fractals or microstructure. You know, you hear me talk about microstructure. That's micro. It could be just a couple of ticks. Well, if this is too low and my buyers are above it, it's support. And now I have a new high volume structure. This is now a developing auction. This was an auction. All of these little pauses are what's too high, what's too low, what's retail. Oh, it's too low, we're out of here. Rotate, consolidation, break high. Too low, support, next layer. Same thing. Break, what happens if I break low? Let's look at the language. I don't use indicators. I got to read the language. And right now, no clue. Going higher, right? Where's my support? It's there. And what about this volume? I need it to do that. Let's look what it does. Uh-oh, change. You notice? Now let's look where we come back. There. Support, break low, resistance. Where's my support? Here. So too high. Alarm bells start ringing. Break low. See the change in the behavior. This is not just another little rotation. This is change. Now, what do I do with this? Let's look. What happens? Where do I come? Support becomes resistance. That's a short or an exit. That's a short or an exit, subject to your trade plan. For me, doesn't matter what I do. It's what you do. Let's watch. Buy sweep suggests lower. Let's watch. Where am I going, you say? Well, where's my support again? Variable high volume node. What was too low? Let's come back. Here. So now I have possibilities. If I come out here, this is called the low volume node. It is what we have. Let's come back here and look at what we have. This is too low. And this is the distribution. If we come outside, this is called the low volume node. And if this is too low at the moment and I come out here, I can then rotate back here and rotate up here. That's called mean reversion. And I'm still looking for longs because of my statistic and to get here. So everything was saying long. And at the moment, it's longs. Variable high volume node, outside edge, looking for rotation to come around and potentially come out the top. That's the goal. Where does it go? Here. So what this is rotational trading. And if you take this trade, you've got to have range. Now, I'm showing you structure. If there's no range, you don't have a trade. But let's assume we had the same structure with 4 points, 5 points, 6 points. You're going to get the same potential behavior. There to there. There's enough range, it's a trade if it's vetted. And what else do I know? By the way, what happened here? What is here? Too high? What's this in micro? Right here. Too high. Resistance. What's this in micro? Right here. You can see where the volume is. Too high. Too high. Too high. You can use these because of what they say. Indicator. Well, I'm the indicator. That's the price. That's the behavior. So I'm interpreting the language of the market versus having something mathematical do it for me. So I can look at this, and because I understand what creates it, and that's what most traders don't understand, is why the market does what it does and what creates it. We depend on indicators as a translation, but if you don't know why and why that's important, you're missing tremendous amount of information. So I know, and I know the structure. Basically, this trade is all there is, there to there, because I'm now in what's called balance, two-sided trading. It changes it. Where do I come out? I come out here. What is this if I come outside? Well, this was too low. I know there's stops here. And I know if I come outside, I can come back here. It's still mean reversion. It's outside in trading. If you don't have the range, you don't have the trade. What do? Mean reversion. If this price is too high, hasta la vista. Where's my support? Well, here, and I'm looking for it to come under so I can get long. And I posted this in Trader Lab. It's called the IB failure. It's a structured trade. And the idea of the trade is to come across the range. So let's look. Now, this trade I could not get on. And let me tell you why. It's called a one-tick, a failed auction. So we had our current low from the last time we came down here and checked it. And we only one-ticked it. And it ran away. So if I can't enter well, I just don't take the trade. So let's look at this. Now, I don't know when I come back here. I mean, I don't know anything, but let's just say at this point, I'm thinking we can go lower because I have levels below still somewhere. If they're on the chart, yeah, here. And there's another one somewhere down here. So this is the long from the ETH, okay? ETH low. So that was the long I showed you at the top of the stream. This is a location. So I already tested this. So I don't know if we're coming down here, but I do know I have over a 90% probability of getting either the ETH high or low. well, the way things are going, being it's a Friday ahead of a long weekend, maybe it's going to be long liquidation because everybody's long from yesterday. And I don't know that. So, not my job. I do know it might happen, but I don't know what's going to happen. So, the last long could be here if you can react. I cannot. So, I did not take this one, though it was what I was looking for. I was looking for it to come out, get long, and then go for these. So that was still on the list over here. One tick failed auction. Then, so that trade didn't happen for me. Now we come under here, and this sets up something called the IBF. This is a long for me. So this is a long trigger, and then I'm looking to come there. That's the primary target. It's called mean reversion. I'm still in this trying to come across the range. And part of that has to do with having done that overnight low and thinking, okay, this is now the extension. And if the trend is up and I have statistics open above still, right, that maybe these shorts now get squeezed out. And now it's mean reversion back here. So this is a long. And that trade would be watch. Now, the way we work in Trader Lab is to get risk neutral. Let's look at this actual trade here. This is the trigger. So the IB, which is right here, if we come back inside, it sets up a long. Let me show you the structure for it. Now there's microstructure here, which I can't do anything with, except when I see it, then I know this, and that tells me there's buyers here. There's the icebergs. Sell stops came out. Thanks for playing. 284, and these sellers are absorbed, which I don't know until I get the buyer above here. That creates my micro high volume structure support. Now, if I break high, I got my buyers here. Now I'm going to be looking at my volume. So I have volume there and there. There's also another thing I can do with this. The sellers were there. The buyers are here. I can put a little bracket around it, and I'm only going to highlight what is going on here so you can see it. This outside edge is that low volume node right there. High volume is there. So think of this like the retail price, and this is where the sellers were there. If I get above the sellers, it sets up a potential long, and I can get long here, one tick above, if that's, and you have to vet this, 3 ticks below here. So that fits a risk parameter around 3 points. Then in the Trader Lab, initially as a developing trader, your goal is a 3-tick scale, or whatever the range is from entry to failure, and you have to determine the maximum risk. The goal is to get risk neutral. And then your stop stays here until you have structure based on your plan. Notice where we come back, we test the top here, we test the top. This is your entry, stop under here, and then you're going for your scale, and you would have a 3-point scale plus. Now your stop stays under here. Notice support. Now the idea is that we hold volume, volume, and volume to go higher, and nobody knows. So that's, part of the joy. And then you're looking to come after your scale. You're looking for this and to come across, and then here and up. Okay. Trade does not provide that, or does it? I'm losing it here. Notice how it holds the support. So all is not lost until you take this out. Okay. By 3 ticks. Did we take it out? I think we did. I really can't tell. Let me see if I can. Yeah, I think we did. I can't tell. Guys, did we take this out by 3 ticks? Can somebody take a look? Just let me know. Yeah, we did. So we got 3 ticks under this swing low. Is that correct? Just confirm that, will you? I got 1 yes. Anybody else? Okay, great. Thanks, everybody. Okay, so this got taken out. This is your support, and we took it out. Trade's over. There. So that's it. So now I don't have anything else to do. I have to wait because we're violating structure, and I have to be conscious of this and what we haven't done. So it looks like we're getting long liquidation now. So I have nothing to do. So I don't have a trade here now. I just sit and wait. So I don't want to keep trying to pick anything here. I do have another structured trade that I can keep aware of. There's 2 actually in here. One is the IB continuation trade, which is a short, and the other one is a long. I know you're going to go, well, that's brilliant. I'm still inclined to be looking at the behavior right there. So I have nothing to do. I don't have a trade, so I just don't do anything. But let's look at the possibilities. This was too low, and we had our buyers here, ETH low. Statistically, we have a high probability of taking the ETH higher low out. If I get lower, this is my next level to be looking at if I want to take a long. And at this point, I don't want to take anything. Possibly, we have a short working here because we can get more long liquidation, and it's called the IB continuation trade. However, there is a bit of a problem with it. And the problem with it is, other than long liquidation, we may trap these shorts. So this is where you have to prioritize your inputs. This can be a short because of the statistic that's below us. Like every trade, the outcome is random. So let's watch. It's called the IB continuation trade, and it takes place on a pullback to this, which is right there. So if you take the short, like all other trades, you got to try to get risk neutral. Let's look at the trigger. It's right there. If we're below this, that might mean this is now too high. That's the IB, and this is called the IB continuation trade. Now, would I take this trade? It doesn't matter. I might take the trade. I might only take it from here to there. I have to scale. So I have to enter really well, and I know I have micro support here now. If I can get below this absorption, then I can go on to my target. So let's see what it does. I don't call trades. I'm just showing you Trader Lab trades. And the thing that happens in the Trader Lab is traders construct, using these structured trades, they construct their own plan, and they have to vet the plan to see if it has a statistical edge. Here's what's really important. This and the IB. So we have 2 items here that are important. The longs were from here, support. If it's possible then that this is too high, I'm going to have to go check what was too low. And we know what was too low is this. So we're going to see if that plays out. And that's trading. I mean, I know you want more excitement, maybe, I don't know. But all we can do is try to get in alignment with it and align with our trades when they show up. And what I show here in the stream is very basic. Because to learn trading, in my opinion, you start out with really a broad stroke, and you reverse engineer it to determine where do you have an edge? And then it's sort of like tuning and tweaking. And once you learn behavior, you can take these behaviors, which are currently kind of a broad stroke behavior, and you can start refining them where you can actually trade this as a short or take this as a long. And then it's not that you trade it, it's that you understand it. And then it's the alignment with something called context. And currently the context is moving lower with statistical probabilities. So for me, it was longs until we failed on the last long. So then it's shorts. Any questions? How we doing? Please get a like if you're in YouTube. Hope you're getting something out of this. 1050-ish. Or the fact we're not able to get to VPOC be a caution. Yeah, Antonio, 1050. Sorry about that. I didn't see that. This over here, Antonio, this one. Oh, actually, this is okay for a long, Antonio. And the idea in this long is mean reversion. It's called the IB failure. So the idea was to go there. There. Didn't do it. I mean, didn't do it, you know. And you'd be leaning against this right here. So this is an okay long for me. Here or here. And you'd be risk neutral. So yeah, that's okay for a long. And so far, we're in mean reversion here. But when you fail, it sets up the short for me. And it's not a recommendation, but where's the short? There. Now, and this is your support. If I get below here, then I'm back in the hunt for Red October. And it doesn't have to ever get here, you know, part of the joy. So it's just you take your trades, you put your stop where it goes. You need to get risk neutral. The range is tight. You have to be really good at execution, no FOMO, which is very hard for us, and patience. And all of us, we don't live and die on one trade. It's all the trades. And if you start making it up or impulsing or FOMO, and it doesn't qualify based on your trade plan, you're on your way out of the business. That's just the way it is. I don't make the rules up, you know. The statistics are borne out by the huge failure rate for retail traders. And reason is most of them are doing the same thing and have the same challenges. By the way, we all do. So when you think about your impulses, what you want to do, what about if those impulses are not in your best interest in this business? Are you going to just ignore it and keep responding to your impulse, which is really chemically induced and emotionally generated? Or are you going to be like the casinos and you just deal the next hand? Hard, isn't it? It's hard for all of us because we're human. So this weekend, and don't forget we're closed for President's Day here in the U.S. It's a shortened session. There won't be any stream. If you understand that, are you just going to ignore it? It's not about willpower. You have to educate yourself. This is what we work on in Trader Lab. Not only how to trade, but where to trade, triggers, trade management, targeting, probabilities. One moment, please. Got to get a little drink of water. Meantime, if you have questions, post them. I'll be back in 30 seconds. Sorry about that. Let me take a look and see if you have any questions. Please give a like if you're visiting in YouTube. Hope you guys are doing okay. So the last trade is a short, not a recommendation naturally. The key in trading is risk management. How do you do that? Well, initially in TraderLab, the idea is a minimum 2-lot configuration. The job of the first contract is to buy the stop on the second contract. So the parameters have to fit. And then it's trade management and targeting based on probabilities. Now remember, the market doesn't have to do anything. It could care less about us. Truly. So we have over a 90% probability of taking out either the ETH high or low. And nothing says we won't take out the ETH high before taking out the ETH low. Just saying. But what we do know is it's Friday, the market's long, and there's something I always say in TraderLab, and it's very important you think very differently than what most retail traders do. Now, we have a viable short. You'd be risk neutral. Okay? That's not the problem. The problem is looking for certainty. That's a problem. Getting confirmation, to use that language, that tells you a lot about yourself, whether you know it or not. The self-talk will reveal to you what is going on in your head. And your in your head thing, mental state, and beliefs and primal wiring are controlling your behavior, whether you know it or not. I have the same problems everybody else does. I mean, we're all in the same boat as far as emotional stimulus and survival and fight and flight, all that. It's built in. Reptilian brain. And years ago, I thought that willpower would stop me from skipping trades, bailing out, all the stuff we do, right? Oh, I'm going to take a stop. I'll get out now. I'll save 2 ticks. I have a photo or a screenshot of one of those from many, many years ago now, where I think I bailed out to save 2 ticks, and it was a 30-point trade. So that was kind of expensive, don't you think? That experience has paid for itself over and over and over again. But I made an error because in the moment, my trade plan and everything, where my initial stop was, everything I was supposed to do, was gone. It didn't exist anymore. All that existed in this micro millisecond was the triggering, emotional triggering from the lunatic Hyde, who's always there. And that impulse, which is a reaction to fear, in the saber-toothed tiger, primal wiring, I bailed out of the trade. It only takes a moment to lose concentration and then be taken over. Does that happen to you? Maybe I'm the only one. I doubt it, though. It happened to me. So I thought willpower. So I pasted all kind of notes up on my monitor, do this, do that, don't do this. And after a while, you don't even see them. I tried putting a big rubber band, a thick rubber band around my wrist. And when those thoughts would come into my head, I would snap it. I thought, well, behavior modification. I'm going to change. I'm going to try to block those thoughts out so they don't surface. But I didn't understand the mechanism. The mechanism is hormonal, primal, reptilian. Our consciousness is built on top of this survival mechanism. And the survival mechanism cannot differentiate between a saber-toothed tiger and a stop. it experiences this fight or flight behavior or mechanism the same way. So in trading, it comes down to understanding this. And if you put a trade on, you have to get risk neutral. And then if you take a stop, you're going to scratch. That's okay. Not thrilled, but it's my job is, since I can't predict the outcome, all I can do is take the trades. That's it. Does that make sense? Oh, okay, Antonio. Yeah, you're welcome. How we doing in YouTube, guys? Moonwalker's asking me if we're at an LVN, could this set up a mean reversion trade? Well, yes, except it's not a long for me at the moment. I don't have a long unless I get above IB. So this is the IB continuation, but we're not trending. So what I'm doing is, I understand this is a potential mean reversion scenario, but I have a structured trade and I work with statistics. So I don't know anything. As I claim that because if you think you know something, you don't understand the business you're in. You're in the business of 100% uncertainty. You are in the business also of probability. That's gaming. So the business you're in is a gaming process, and the idea is to only play games, if you want to call them that, or structured trades that have an edge. The problem with trading in a random environment is the random outcome or random distribution of outcomes. Why does this trade pay at times? Other times you take a stop. Other times you get risk neutral and then scratch. What's the variable in that? Well, too many variables to quantify. So all you can do is say, what's the condition? What are the probabilities? Remember why we were taking longs. Over 90% probability to take the ETH high or low. The other reason I was kind of keen on the longs was this was a level from yesterday's RTH that set up the long down here this morning at 5 in the morning, whatever it was, in the ETH. So if I have a long from this area, then maybe I'm not coming back here. I've already checked it, but the market seems to be saying something different. So what do? I try to stay in alignment. I cannot predict anything, so I don't put myself in this place of predicting because then I'm looking to be right. If the casinos can't predict, how can I predict? Have you ever thought about it? If you're not sure about what you're trying to do, in my opinion, we are in a gaming business. So think how a casino operates. They don't control the cards coming out of the deck, and they don't control how gamblers play the cards. So that's 100% random. So what is not random? How they play the game. So if you want to use a proven business model to build a trading business, use the gaming business. We're not trying to reinvent the wheel. We already got one. But what we have to do is create processes that align with the environment we're actually in. Most of us, because of our primal wiring and our fight and flight and fear and all this other stuff, are trying to solve for a problem, which is uncertainty and randomness, in an environment that's all we got. How do you solve for something and create certainty in an environment where it doesn't exist? Think about that for a moment. Is it possible maybe most retail traders are trying to solve for something that cannot be solved? Maybe we need to solve for something else that can be solved. Is that logical? That's the business, in my opinion. And Moonwalker, when you're talking about mean reversion, I don't have a mean reversion trade here because we have fallen away from the mean at the moment. So I am playing statistics, which puts this on the hit parade, and it's not a recommendation. So another part of this is the narrative. The market is continually rotating. Remember, what's too high, what's too low, and good luck with that, right? Because you won't know until hindsight. But the other part of narration is context. When we started this morning, remember, it was longs only, trying to go for the statistic, which was the ETH high and another target above, right above it. And then we fell out of this. Well, once you fall out, the context has changed. Then instead of taking out, and this was the targeting, look where we got. We got right there. Try to go there and there. Targets. Close, but as they say, no cigar. So that sets, and this is still open, could still go there, not our job, and this is open. So pick one. And as Dirty Harry said, do you feel lucky? Well, do you? And yeah, there is some luck. But you know how luck turns into something? Probability. Luck shows up when you have a statistical edge. And you still need some luck because it's random. So let's say you need luck. But if you're a gambler, you don't have an edge. Statistically, even though you're going to have winning hands or winning trades, and we all have winning trades, which is, I think, one of the worst things that can happen to us is actually to have a winning trade with no edge. Because now we think it's a video game and that we can, and now we're looking to say, well, I see a rotation here, I should sell it, right? Well, this you should because it's a structured trade. But you're going to see them everywhere. You start seeing triggers everywhere. What do you do with it? Well, if it's not at a location that's in alignment with the current context, which is always being tested and might change at any moment, you don't have a trade. You will see rotations. And you can extrapolate trade management processes with these, which is, again, a more advanced conversation. But from a primary input, this is a short. It was a long originally. Remember? IBF, mean reversion, failed. If this, then that. If not, then what? Well, if it's the if not of the conditional statement, then what? Then trouble for the longs. Then what? Short. That's what. To where? Well, good luck with that, but we'll take a wild guess and say maybe here. So that's the trade. There, looking for that. And if we get under there, there's more. There's also this. And we'll see how that plays out. I know this is probably not what you're looking for. I don't know what you're looking for. I know what I look for. I've done the high volume trading. I've done the scalping. I used to be a high volume trader in the NQ. If you want a little volatility, take a walk on the wild side. We call that one the snake. I used to trade up to 100 times a day. And I'm not, believe me, when I say not a recommendation, that is definitely not a recommendation. My volume was such that it was either go lease a seat so I could lower my costs and keep the volume, or change my time frame or my fractals. I decided that I didn't want to, I didn't like the frequency of the trading, the fatigue, the brain damage, the stress, constant. So I said, well, if I trade less, I'll have less risk and I'll have more rotations and I can relax more and just wait for trades. So it took an adjustment for me to move away from that and go back to more rotational trading. Early on in my career, there was no day trading. It was positioning. So I was a trend follower and a swing trader. So I kind of went from that to the opposite extreme. And then I kind of went back again to something in between as a day trader. So I'm still trading rotations. It's just, and once you understand how the market works, you can slice it into anything you want to slice it into. What, quote, time frame. Now, for me, there's no time in this, in the developing time frame. It's fractals. It's this. So how long does it take for this to happen? Well, that's my quote time frame. Why is this important? Because that's too high. What do I know then? Well, if that's too high, then I want to be thinking about shorts. And if I want to think about shorts, I got to think about where my targets are. That's all I know. That's all I need to know. And the other thing I need to know is where to interact, what a trigger looks like, getting risk neutral. If I get risk neutral, I relax. I manage the lunatic who's under the hood, and I manage my trade. And then I'm working towards a target. I get taken out. It's just one trade. That's actually the business we're in. If you accept that, I'm not saying it's true for you. I'm just saying is it's true for me. And if you've been trading a while, you kind of got to, I think, find your truth, whatever it is for you. Won't necessarily be mine, but most, I would say, everything you've done, I've done. Every dead end, I call it Trader Groundhog Day. Every alley I've walked in to get to the dead end, and those alleys could be a year or 2 years or 3 years of tuning, tweaking, adjusting, adding, subtracting, etc. Does that sound like you? It's like all of us. The difference is, when do you understand or at least recognize that there might be a problem other than your desire and your persistence? Maybe that's not the solution. Maybe the persistence is the result of randomness and winning trades that anybody can have. Maybe that's the problem. And I alluded to that at the top of the string. The random distribution of outcomes. Think about this. If you had nothing, you didn't even have a screen or a mind, you had nothing, and you only had buy or sell, and you just pushed them randomly. And let's say 5-tick stop, 5-tick target. Just making it up. Do you think you'd have winners along with the losers? You would. So would that mean then that you have an edge with that? So now you could trade it or make it better so you can trade it? But it's random. So if you don't have an edge, how can you trade it and expect that you actually have a business model that actually can keep you in business? The casinos only play games with the edge. That's the whole point. And that's why Trader Lab exists. To understand, so you can understand the business you're in. And then solve for the randomness and train yourself to be able to operate in an environment that is continually, consistently counterintuitive to your base wiring as a human. That is really the obstacle. And most retail traders never get to it because they're too busy looking for certainty and confirmation where it doesn't exist. I hope that makes sense. Questions? And how we do it in YouTube, please give a like. And this stream will be available over the weekend. We're in a rotational trade. There's really not much to do here. Now this, I have nothing here. It's all you have here is structured trades, risk management, scaling. And if a trade doesn't work, you're going to scratch. That's as deep as it gets. There's nothing more to this. So this is just not a great trading day, Yeah. It's kind of you look at a day like yesterday where you can have really outsized opportunity and potential, and many in the Trader Lab had really terrific days. And then you come into a day like today and it's rotational. So, there's not a lot of opportunity. The only way you could get opportunity in this is you have to be willing to wait, to get risk neutral, and then you need to have a trade management process, or you scratch this trade if it comes out above here. And then that's that. It's the end of it. Stops are over the IB. It's not unusual for the market to return to it. Let's see what happens right here. Right here. So let's see what we get. We're looking for a stop pick and potential structure right here. Let's just see what it does. And this is not a trade recommendation. It's only an area to observe. Liquidity comes in the book. Where is it? Sorry, guys. I'm trying to put something on here, and I'm probably making a mess for you. Okay, we want to watch this. Buyers are here. Sellers are here. If we break below, we're going to observe it. It's not a trade recommendation. Want to watch the liquidity? I have stop divergence. I have an iceberg. This is micro high volume right here. So we're observing this. This is the store. The shoppers are here. The buyers are here. The sellers are sitting here. The micro high volume is right there. I'm in alignment with this. I'm in alignment with my IB. We want to see what happens here. Do these guys pull? What are they doing? Sellers are here. Buyers are here. Let's see what happens. If nothing happens, there's nothing to do. So there's nothing to do here. So we want to watch. So what I do here is when I get to a location, which is this, I'm going to look to see if I get a trigger. And I have no trigger here. I do have something called the IBF, which is a long. And if you took a long here, then you're going to be looking to come back to VWAP. But this is just not, I get kind of where if it's not a good range, doesn't have good range to it, and it's just sloppy, I can go do something else. I'm not sitting in front of the screen having to make something happen. This is the target. So here to there. It's called mean reversion. It's called the IBF. So we had the IBF, wherever it was, back here, trying to go there. It failed. We came out. We have the IBC, which we're trying to go to statistics. You would have scaled. You get taken out. It creates the IBF. The IBF in a rotational market can take you back to the mid, the VWAP, and then here. So the objective of the trade is to attempt to get back to the mid for a scale. So it's from here to here. But this is just not. Just not good trade, Doesn't mean the trades won't work. It's just look at the market we're in. What we're doing here is rotational trading. So it's up, down, up, down. You get the buyers, you get the sellers. We are taking, so the longs in this leg get thrown under the bus. The idea then is we get shorts here. These guys in this leg get thrown under the bus. It's basically rotating over itself and abusing everybody equally. If you want to think about what you're seeing, it is what's called two-sided trade, right? So you need to know what you will do before it happens. So if you took a short, you'd be scaled, you'd be out. You take a long, you're going back here from the IB, and then you're looking to try to come back to the mean. And we can if we come all the way across, we can come up here and out the top. Remember, over 90% probability we take out either ETH high low. And I'd love to be able to tell you which one but I can't. So I have to try to stay in alignment. It's not any deeper than that because we cannot predict what it's going to do. Wouldn't you like that? You have questions. By the way, if you're in YouTube, please give a like. It supports the stream. Come to the Bookmap Discord Trader Lab community if you want to learn more about this. Trading is whatever the market offers. You can't make it give you anything other than what is available based on your plan. If you don't have a trade plan and you don't know what you're going to do before it happens, then you're making it up as you go. In the Trader Lab, the idea why the Trader Lab is what it is and why it's such a popular community is that you do all the work outside of market hours. All you do is then bring your plan to the market. And then you're not going, what should I do here? Should I get out? What should I do? That's not the question. Because if you're in the business of trading, you already know what you will do. You don't know what the market will do. You know what you will do. You're not going to be asking, if you want to be in the business, you're not going to say, should I get out here? Is this a short? What is this? How about, I don't know, could be. Or it might just be a rotation, and then we continue higher. We got the VWAP in the mid. I think the mid is right under here. Yeah. And we got resistance. So if I get long here, I got to be thinking at least about this and try to get here, which is the mean. You'll notice, and it doesn't mean we won't go lower. As we went lower, what do you notice? This is the volume profile. What does it say? Language, remember, no indicators, language. It says there's less volume down here. If there's less volume, what happens if the price gets low in the store? Do the sellers keep it on sale? Well, what happens if we get too low, wherever that is? There's less volume. And what happens at the high if we get too high and they're not going to pay the price? There's less volume. If I run out, and we don't know where this low of anything is, or even if it is the low, if I run out and the volume tapers down here, it means there's less participation. The job of the market is to attempt to get everybody to participate, and that means finding the retail price. Currently, unless it changes, this is the retail price. It's the highest volume. Did we find too low? If so, then there. That's Trader Lab. That's auction market theory, how the market works, why it does what it does, how you might get in alignment with it, and it's all random. It's just a matter of understanding what might happen, where it might happen, having structured trades that you have vetted, and yes, you're going to take stops. The casinos pay the gamblers. We have to get over our attachment to outcomes and dollars. We need to be more attached to process and probabilities because that's the solution. Making it up as you go is the problem, and not knowing what you will do before you get there. We don't want to be questioning what we will do. We need to know what we will do because we don't know what the other participants will do. That's the random nature. Hope that makes sense. Please give a like, a thumb up. I'm going to show you what the Trader Lab looks like, just so you know. You're all invited. You can use the link in the bottom of YouTube. This is what's going on in Trader Lab. There's also a library of webinars that you can access. Some of them are up to 4 hours, 5 hours long of real-time narration in trending and rotational markets and transitioning markets, where they go from trend to rotation, why most traders using indicators fail, and then Trader Groundhog Day. I think Trader Groundhog Day describes all of us. That's when you work hard and you think you finally got it. You get that little euphoria, I got it now. And then that is followed by depression when you realize you don't. And then you work hard and you get that euphoria, I made it better. And then you get that depression. Trader Groundhog Day. If that's you, it's all of us. We're all the same. The differentiator is, what are we going to do about it? Are we going to, what would happen if you realize you have a process that's defective, but you don't know it? Remember ancient mariners. You all remember about ancient mariners. There was a belief that the earth was flat and they didn't want to fall off the end of the earth. And it was true for them because they believed it. So they didn't do it. It took other explorers to take the risk of falling off the end of the earth to figure out and find out, no, it's just the horizon and the earth is round. They didn't know that. They thought it was flat. Well, we can believe something, but it might not be true. It might be a false or dysfunctional belief. Is it possible the things you believe about this business are not aligned with what the business actually is? And you're trying to solve for something, certainty, predictability, and all that thing, confirmation, in an environment where it doesn't exist. Is that possible? Ask yourself the question. Now, where might you get some answers? That's the Trader Lab. You can use the link in the bottom of YouTube if you want to visit the Trader Lab. There is no cost, and it's a community of serious traders that have come together to leverage their collective experience. I think it's a place that can help you on your journey, and you're all welcome. There's also 60 PDFs of these structured trades, some of which I've been sharing with you, that you can download. That's also in there along with that library of webinars. Feel free and introduce yourself. Say hi. Look forward to seeing you in the Trader Lab. Have a super weekend. And don't forget, we're closed for President's Day on Monday. So I will see you on Tuesday. Take care. And don't forget the like.